Are you a high-income earner who's been told you don't qualify to contribute to a Roth IRA? Don't worry, there's a workaround. The Backdoor Roth strategy can open the door for you. In this video, I'll explain who it's for, how it works, and highlight common mistakes to avoid. So let's dive in. Welcome back, Doug Burson, CPA. So who is this for? Well, it's for high-income earners who've been told they are not eligible to contribute to a Roth IRA. And while that is true, there is a workaround. Now, if your income is above $150,000 if you're single or $236,000 married filing joint, you don't qualify. That part's true. However, you can still contribute $7,000 to a traditional IRA or $8,000 if you're over 50. While this contribution is not deductible, this is where the magic happens. So this is important. You're contributing to a traditional IRA. You've been told you're not eligible for that either. That's not true. You can contribute to a traditional IRA, you just can't deduct it, and that's what starts this strategy off. Now, there's a loophole that will let you do this in a very few easy steps, and now we're going to start going through those. So stay with me. This isn't going to take long. And this is a wonderful opportunity right now in this current market to take advantage of this. So step one, you have to open a traditional IRA. It's not a Roth IRA. You're going to open a traditional IRA, and then you're going to contribute the amount up to whatever you've chosen. Once again, we already said that, $7,000 in 2025, up to $8,000 if you're over 50. Now, this will not be deductible because your income is over the threshold, and that's okay. Once again, this is a strategy for high income earners. If you're eligible to contribute to a Roth, why would you do a backdoor Roth, right? So this is for those of you who've been told you can't do it. Now, number two, you're going to need to go open a Roth IRA. Now, this sounds really complicated. If you have a good financial advisor, they're going to walk you through this. So this isn't that hard. So we're going to open up a Roth IRA. If you already have a Roth IRA, you can skip this step. But if this is the first one you've done, we're going to need to open a Roth IRA account. Now, number three, we're gonna make the conversion. Like I said, this really isn't that hard. It's just important that we do it right. So we're gonna make the conversion from the traditional IRA we just set up, and we're gonna now convert it into the Roth IRA. That's all we have to do, but make sure your custodian does a conversion. You gotta be careful. Sometimes people aren't being cautious with what they're doing, and they may think you mean a recharacterization. That's not what we're after here. We are after a conversion because we just contributed money to a non-deductible traditional IRA, and we don't want that money to stay there. We want to now convert it. This is why it's the backdoor Roth. We're going to convert that into the Roth. Now, those of you who've done any Roth conversions have heard about them or you've watched other videos on that. You're worried because whenever you do a Roth conversion, it triggers tax. But remember, we just started this thing and we didn't deduct it because it was non-deductible. Therefore, the conversion is a non-taxable event. Now, if you set up the traditional IRA and let it set for a while, there could be some earnings, right? You put in $8,000, it's earned a little money, now it's $8,050 or $8,100 or whatever that number is. You're going to have some extra there potentially. We're going to convert that over the whole amount. That extra amount, that 50 or that 100, that would be taxable income. But the rest of it, because we didn't deduct it, it's just a conversion. Generally, if you're doing this, most of you are going to do it pretty quickly, so there's not going to be a lot of income to worry about. Now, a lot of people do this, but I'm also a CPA and I prepare a lot of tax returns, and this is where quite often the strategy starts to fall apart. You go and you do the backdoor Roth, but you don't tell the tax man. It's critical. We have to make sure we report this on the tax return, and it needs to be done right. So when you do this, make sure you tell your tax guy, say, hey, I did a Roth conversion or a backdoor Roth last year. Here's the amount and here's the forms. We need to report it. And we want to make sure that they do an 8606. So when you get that return back, take a look at it. Especially, I believe it's page 2 up in the top, you're going to see amounts where it says Roth conversion amount. We need to see numbers there. If we don't see numbers in our 8606, the tax guy missed it. If the tax guy doesn't know what an 8606 is, get a new tax guy. Now, there are some problems here. One, we just talked about it a second ago. You have to make sure this gets reported on your tax return. This happens all the time. I'm doing tax returns, and we find out people have been doing conversions or backdoor Roths and they haven't been telling us, and that's a mess. You don't want to deal with that. Make sure you do this right from the start. But there are other problems. Now, if you already have a traditional IRA, a SEP IRA, a simple IRA, this is not going to work for you, at least not to start with. And the reason is a pro rata rule. I'm not going to go into all the nuts and bolts of that. Just know that if you try to do this and we have another IRA out there that was deducted off our taxes, we now have a problem. This strategy doesn't work and you can create a mess. Now, there are workarounds. You can potentially take that IRA and roll it back into your 401k. But it can't be an IRA, a simple IRA, or a SEP IRA if we're going to do this, because it just messes it all up. Just in the back of your head, now there's something called the pro rata rules, and we want to avoid those. Now, if you're finding this video helpful, and I hope you are, go ahead and subscribe. If you have questions, please feel free to leave those behind. I try to answer those when I can. I can't get to all of them, but I do try, and it could also inspire us to make another video if the question's really good. However, this may be a really good opportunity for all of you to consider, one, doing the backdoor Roth, and also maybe even do Roth conversions. We'll talk about that more in another video. But right now, you can still, because we're at the beginning of April, you could do a Roth conversion, a backdoor Roth with a conversion right now for $24 if you didn't make a traditional IRA contribution yet. Because remember, we do a traditional to kick this whole thing off. So if you didn't do one last year, we could do it for last year, and we could go ahead and do one now for this year. And that might be a really smart move if you can pull that off, because the markets are in turmoil right now. Things are down, and this could potentially be a really good opportunity to buy things at a discount. We don't know for sure where everything's going, but you know, the old saying, you want to buy low and sell high. Right now, we've had a pretty big correction. This may be one of the best opportunities you could have right now. Even if you don't have time to get it done before April 15th, it still might be a really good time to consider doing the backdoor Roth for 2025. So with that, this is hopefully helpful to you. Go ahead and subscribe. Once again, like I said, we'll be doing more on the Roth conversion strategy. I just really think this may be a fantastic opportunity for those who have been waiting. A lot of you have your investments that are down right now, so we can actually do this conversion while it's going to cost us less in taxes, and let the rebound happen in our Roth account, which will be tax-free. So it could be a gift for us right now. So we don't want to miss this opportunity. Stay with us. So with that, we look forward to talking to you more, and we'll see you again soon.